and we'll go ahead and get started. Good afternoon, everyone, and thank you for joining us today for our monthly webinar sponsored by the United States Aquaculture Society, the National Aquaculture Association, and the Alabama Cooperative Extension System. Today, we're fortunate to have with us Dr. Jonathan Van Senten with the Virginia Seafood Agriculture Research and Experiment Center, or Extension Center. Jonathan's well known within the USAS, and he was recently awarded the Distinguished Early Career Award. So we're pleased to have him. Jonathan is going to share with us today the results of a survey that he and his team developed to examine the effects of COVID-19 on aquaculture, aquaponics, and allied businesses. Jonathan, we appreciate your time. We're happy that you're here with us today, and I will go ahead and turn it over to you.
Okay, well, thank you very much. I hope everyone can hear me all right. Thank you to USAS and the NAA for the opportunity to present today on the impacts of COVID-19 on the US industry. I'd like to also acknowledge my co-authors, Matthew Smith and Dr. Carol Engel, that have been helping on this project from the very inception. All right. So before I get going, I do want to say thank you to all of the farms and businesses that are participated in the study, and to all those of you who helped us to distribute the survey to industry and other stakeholders. It's, you know, without your assistance and participation, it's impossible to gather this kind of information. So we're very appreciative of all the support and help we've had from folks along the way. So I don't want to spend a whole lot of time on background and justification, but I do want to give you some idea of why this came about and why we started doing this survey work this year. So on January 20th, we had the first confirmed case of COVID-19 in the United States. And shortly afterwards, on March 11th, the World Health Organization declared a global pandemic, which was followed by the United States declaration of a national emergency on March 13th. And that led to a series of closures of non-essential businesses and implementation of various social distancing measures, shelter-at-home orders, and a variety of other steps in the interest of public health. Agriculture, aquaponics, aquaculture included, were clarified to be essential industries and therefore were allowed to remain in operation through the Department of Homeland Security. Now, during this time, early this year, communications with producers and with industry association leaders revealed that the industry was struggling under the pandemic. We were getting reports of lost sales and challenges with production. So it was actually Matthew Smith who proposed first to look at assessing the impacts of COVID on the US aquaculture industry, which very rapidly led to us developing the first survey, the Q1 survey that went out earlier this year as a collaborative effort between Virginia Tech, Engelstone Aquatics, and the Ohio State University. So I also want to take a moment to acknowledge the other members of the team. The project did start with, like I said, Matthew Smith, Dr. Carol Engel, and myself, and Dr. Michael Schwartz from the Seafood AREC also. But we've since expanded, and we now have collaborators at Mississippi State University, Dr. Ganesh Kumar and Shraddha Hegde, and then also here at Virginia Tech, Charles Clark, research specialist, and Shannon Fluharty, master's student, that have been involved with this work. So I want to take a moment to recognize them as well. So the data collection, what happened is, of course, with all of the restrictions that were imposed, we also had our own university restrictions in terms of travels and research activities, which meant that really the only viable way for us to disseminate a national survey in such an accelerated time frame was to use an online distribution method. So that's why we went with Qualtrics. We developed the survey instrument in Qualtrics and distributed it via email in collaboration with national, regional, and species-specific industry association, as well as the help of quite a few extension agents. I should note now, before we start talking about any results and any details, that the respondents self-selected for participation in the study. So there was no probabilistic sampling method used, and that was largely because of the time constraints and challenges in establishing contact lists of producers nationwide. So given the high dependence of aquaculture products generally on restaurant and other in-dining establishments, it's plausible that non-respondents experience similar impacts as what I'm going to be presenting here today in terms of the disruption of traditional marketing channels, challenges with farm labor, challenges with inputs, goods, and services, and the management of increased inventories of unsold market-ready product. So in short, that means the kinds of effects and impacts that we saw were broad and therefore likely to have affected even those that did not respond to the survey. So we all know that about 50% of global seafood is produced by aquaculture. And in the US, the aquaculture industry had an estimated production value of $1.46 billion in 2017, accounting for about 21% of total US seafood production value. And again, as I mentioned just a few minutes ago, a really important factor for US aquaculture, which is responsible for much of the economic hardship being experienced by producers at the moment, is that a significant portion, about 69.6 billion of seafood expenditures in the US occur at food service establishments. So this here is a table directly from the USDA Census of Aquaculture that depicts the first point of sale for aquaculture products in the United States. And I've highlighted the direct-to-consumer column just to kind of illustrate the point that there wasn't a lot of product that was sold direct to consumers as a first point of sale within the US aquaculture industry. You see that the percentages here are all on the lower side, with most of the product moving either through retail or processors or live haul brokers in many cases. So let's get to the results of the study. I'm going to present them separately. First, I will give an overview of respondent characteristics, and then I'll talk a little bit about the Q1 findings, and then the Q2 findings, and then we'll kind of summarize kind of in a recap of what are some of the broad trends and things that we're seeing that after looking at both quarters are starting to emerge from the data. So Q1 results, we had a total of 652 participants in the survey. Of that, 537 responses were sufficiently complete for analysis. That represents about 18% of the number of farms that reported on the USDA Census of Aquaculture. Q2, we did have lower participation. That's not uncommon with these kinds of surveys that go out quarterly. But there it was 256 total participants, with 248 responses sufficiently complete for analysis. And that represents about 8% of the USDA census number of farms that reported in the most recent census. So the respondent characteristics. While individual responses for the study are kept confidential, it's still important for us to understand who the respondents to the survey were. So the next few slides are going to cover that, and I've just listed Q1 and Q2 on each slide together to make it a little more easier for overview. In this case, you'll see here the breakdown of USDA aquaculture regions and the regions that respondents to the survey came from. So looking across these, you can see that the southern region on the USDA census accounts for about 59% of producers. And in our survey, it was a little bit under that 49%, 42% in Q1, Q2 respectively. And we had a little bit of overrepresentation in the Northeast region at 26% and 24% across the 2 quarters respectively. The Western region was a little lower than a little higher than the USDA census, and the North Central region was a little higher and then a little lower. And the tropical and subtropical region, the CTSA, was about around the percentage that's accounted for in the USDA census. So this gave us an idea on whether or not the sample that we had from the survey, collected was representative somewhat of the broader industry, yes or no. Looking at the primary products reported by producers, this is Q1 in dark maroon, in dark red, and Q2 in orange. You can see that mollusks accounted for the largest portion of respondents in both surveys, 41% and 47%, Q1 and Q2 respectively. And that was followed by food fish. Food fish, of course, accounts for a variety of different species, such as catfish, trout, and others. So we grouped them under food fish in this case. And then the other sectors were all lower than that. For those of you who might be curious how this compares to the actual USDA census data, mollusks are about 30% of the number of farms listed on the USDA census, and food fish are about 37%. So we may have had a little bit of overrepresentation of mollusks in our response and a little underrepresentation of food fish here. The other sectors, we were pretty much close to what we saw, a little lower than what was in the census of aquaculture in most cases, but within a few percentage points on most, except for crustaceans. Crustaceans on the USDA aquaculture census account for 19%, and we had 3% and 2% in Q1 and Q2 respectively. So again, just important to keep in mind when you're looking at the results of the data, what the makeup was of the respondents in terms of extrapolating out or coming to any conclusions. So scale of production is also something that we asked our survey participants for. And this is, of course, pre-COVID-19. You can see that the largest group of respondents were in the greater than $1 million per year in annual sales category, 22% and 24% respectively in Q1 and Q2. We did have several respondents that chose not to answer this question. The no response category here, as you can see, 12% and 8% of respondents in the 2 quarters. But very few respondents at the lower scales compared to some of the higher scales of production. And of course, we also asked about primary marketing channels that respondents were using. You can see here that in both quarters, again, the largest percent of respondents did their primary marketing through a distributor, 31% in Q1, 29% in Q2. And that was followed by a little bit of a flip-flop between Q1 and Q2 between direct to consumers and processors, with Q2 having processors coming in second and Q1 having direct to consumers coming in second. So that was interesting as well. Okay, so digging into the Q1 data, this covers the period from January to March of 2020. And this data was collected from March 23rd through April 10th. So all of these surveys contain quite a bit of information. I'm only going to cover some of the key questions and topics in detail for this presentation. And I'm going to discuss primarily the average results across all segments. But the charts will include some of the disaggregated results for those of you who have specific interests. And these reports are publicly available for anyone who would like to dig deeper into the findings or look at some of the specific disaggregated results. And I will share that link with you at the end of this presentation, where you can find all of those on our website. So I will focus on primarily what is highlighted in yellow on all of these tables in my discussion, because that represents the average across all the segments. So in Q1, we see that a very large percentage of respondents experienced lost sales or canceled contracts. 84% had experienced lost domestic sales, and 80% of respondents had canceled private contracts. We also saw that about a quarter of respondents had experienced lost sales to export markets as a result of the pandemic. Now, if you look across the table, you will see that this varied from species group to species group. For example, in trout, we had 100% of our respondents that reported lost sales. In catfish, it was a little lower, 77%, aquaponics, 67%. But interesting to note that they were all above 50%. So that means I think it's safe to conclude that industry-wide, there were some challenges being experienced in terms of sales in the first quarter of the year. So another important factor, of course, is to estimate the value of these lost sales in quarter one. So again, variability across the industry here when you look at some of those disaggregated numbers, but across the entire industry, all segments, the average, we saw that about half of all respondents ranged between the $10,000 and $250,000 in lost sales. 19% of our respondents were not able to estimate the value of lost sales at the time they completed the survey, which again is understandable given that you know, early in the year, quarter one, it wasn't yet clear how some of this was going to pan out during the rest of the year. So some folks were just not able to estimate what those losses were like for that quarter at that time. So one of the analyses we did with the quarter one data was to look at lost sales reported as a percent of total annual sales. And this is annual sales that we asked for pre-COVID. So going back to that scale of production. The analysis that we did revealed that the tilapia sector had experienced the greatest lost sales as a percent of total annual sales, namely 38%. This was followed by crustaceans, ornamentals, and other finfish, such as hybrid striped bass or largemouth bass or carp, that were sold live as food fish at 21%. So this was to give us an idea, again, of what those sales were, lost sales were in comparison to the total annual sales. And this information was critical because it was the kind of information that USDA was looking for the CFAP program. So we were able to calculate these from the survey data that we had gathered and provide them to USDA. So another thing that we asked about in the survey, and this question was really designed to get at the potential longer-term economic impacts of the pandemic and to assess those potential impacts for cash flow disruptions within the industry. So the question asked how long respondents could go without sales before experiencing cash flow effects. Across all sectors, the largest percentage of respondents could go for about 1 to 3 months without sales before experiencing those cash flow effects. And again, it's important to note that a quarter is 3 months, which means that quarter one respondents were expecting to experience these potential cash flow effects somewhere during quarter two. So you can see here on the table that we did have some no response, but it was 43% between 1 and 3 months, and then 17% between 4 and 6 months. There was a portion of our respondents that had less than 1 month that they could survive without sales before cash flow problems. And again, across the table, you know, variability across the different segments of the industry, as you can see here, with some having less time on average and others having a little bit more time before experiencing some of these challenges. We also asked about labor, both in terms of terminations, but also labor shortages due to illness or shelter-at-home policies. This table here depicts effects on labor in terms of whether employees had been terminated or not, or whether the farm or business would soon have to make a decision on terminating employees. Across all segments, 1/3 of our respondents indicated that they had laid off employees during the first quarter as a result of the pandemic. 40% had not laid off any employees, and about a quarter had indicated that they would soon have to make a decision about terminating employees. So again, looking at some of these effects in terms of revenue effects that then translate to effects on the farm with employment. So asked about the number of employees terminated, majority of respondents indicated that this was between 1 and 3 employees during the first quarter, 56% averaged across all the segments. That was followed by 4 to 6 employees at 19%. And then we did have some respondents that had over 20 employees terminated during the first quarter, individual cases in excess of 100, in some cases more. So getting a sense that clearly there were cascading effects that came from revenue losses that then also transitioned to challenges with labor on the farm. So the last question I want to cover on labor challenges for Q1 was how long before respondents had to make a decision on terminating employees. You can see here that the majority of respondents said they had between 1 and 3 weeks to make a decision on additional terminations. So again, this result really emphasized for us the importance of doing this survey quarterly, since these effects were likely to take place during Q2 of 2020. Just like some of those earlier effects I pointed to in terms of lost sales, you know, it's likely that these kinds of effects would have cascading consequences throughout the year. So I want to spend a little bit more time talking about this slide, just so that I can cover some of the examples that I think are important to think about. But we noted that there were production challenges expressed by respondents, and I will say, let me first say that these percentages don't add up to 100 because the question asked respondents to select all that apply. So if that's a little confusing to some of you, I apologize, but that's why they don't add up to 100%. But yeah, respondents noted challenges with obtaining critical production inputs. Sometimes that was due to issues with shipping or freight that had emerged as a result of the pandemic, and again, these closures. But there were also a few cases where issues with production inputs were because of impacts on the manufacturing sector. So it varied from sector to sector what the exact specific effects were in terms of these inputs. For example, the shellfish sector, the mollusk sector noted issues with seed and getting seed. Another effect that was experienced on the production end was for services provided by other sectors of the economy, such as construction, consulting, engineering services. These were, in some cases, not essential services and therefore shut down in response to the pandemic, and therefore unavailable to producers who may have needed those services, which then resulted in challenges on the farm with production or preparing for future production. So I think it's important to think about those because again, these are some of the cascading effects that may have longer term consequences. If someone, for example, was to use the spring to repair a facility to gear up for future production, and that repair or that construction couldn't take place because of the shutdowns, you know, that will have an impact for them going forward in terms of their ability to produce product even beyond 2020, perhaps. So with that, I'd like to transition to Q2, and I'm going to talk again just about the all segments average of U.S. aquaculture. This represents the period of time from April to June of 2020. And these data were collected between June 29th and July 17th of this year. The first thing you'll notice about these tables is that there aren't as many disaggregated reports. And that's because, again, the participation in Q2 was lower. And so we decided that it probably we could not share some of the other sectors because of the number of participants being so low. And we do protect the individual responses of participants in the study. So if it was below, it was 3 or less participants, we chose not to provide a disaggregated figure. So what you'll see here is primarily catfish, sportfish, and mollusks in these tables for Q2. Now again, the rush to get Q1 survey out meant that we did our due diligence in terms of pre-testing and having the survey reviewed, but you always learn something when you do a survey. And so our Q2 survey was a little different, and we did change some questions and add some questions. Also in regard to some of the financial assistance programs that had been developed by the government in Q1 as a response to the pandemic. So you'll note that some of the tables here are a little different with some different categories from the Q1, but I'll go through them here. So again, asking about lost sales during Q2, lost sales and canceled contracts. And we did add categories here for asking about delays. So that was not something we had asked about in Q1. 74% of all respondents across all segments did indicate that they had lost domestic sales. Again, 22%, almost about a quarter, had lost sales to export markets. We did see here by breaking out the cancellations and delays that there was some difference there. You see that 43% of respondents had private contracts canceled, but 33% had private contracts that had been delayed. So those contracts may still come to fruition at some point in the future. That's not clear. And again, variability across the sectors. If you look at the catfish, sportfish, and mollusks, you'll see that mollusks, 93% of our respondents reported lost domestic sales, which was much higher than the catfish and sportfish respondents for the Q2. So looking at the values of lost sales in Q2, again here you see that across all segments, the bulk of the lost sales tended to range between that $10,000 and $250,000 range. We did have some respondents that reported in excess of $1 million of lost sales for the quarter, and a small percentage of respondents also that could not estimate the lost sales for Q2. So what this showed us was that even in Q2, there were still respondents or segments of the industry experiencing lost sales. If you look at catfish here on this Q2 table, you see that 50% of our catfish respondents had lost between $100,000 and $250,000 in sales in the Q2. So looking at some of those cascading effects, again, in this case, the effects on labor during Q2, we did revise this question again, got a little bit smarter after the Q1 results that we had looked through. And so we added an option for termination, but then also having hired additional employees. As you can see here across all segments, only about 5% of our respondents indicated that they had hired additional employees in the Q2. And 50% of our respondents across all segments had no change in employment in labor for Q2, whereas 27% had laid off employees in the Q2 and 15% would have to soon. So this was very similar to the Q1 in terms of the number of employees terminated during the Q2. Sportfish did not terminate any employees in the Q2. Our sportfish respondents, I should say, did not terminate any employees in the Q2, which is why there's no data here. So again, looking across all segments of Q2 respondents, the majority had terminated between 1 to 3 employees, which was then followed by 4 to 6. We did have a few instances of greater than 20 employees being terminated by respondents in the Q2. When asked the follow-up question on how long before respondents had to make a decision on terminating employees, here again, it looked like a little bit longer of a time frame. Previously, the majority had said between 1 and 3 weeks. Now the majority was between 4 to 6 weeks. Exactly what drove some of these effects, it could be varied by the respondents and the sectors that responded. Also potentially because a lot of respondents had terminated employees in Q1, which means that they may not have needed to terminate any employees in Q2, which may have affected the responses here as well to some degree. So here again, going back to this effects on production in Q2, variation again across the different sectors, production inputs affected. You see that across all segments, 46% of respondents said they had experienced challenges with inputs. But looking across the sectors that are listed here as disaggregated values, we see that mollusks, only 22% of respondents experienced issues with production inputs, compared to 50% within the sport fish industry or 46% within the catfish industry. Again, respondents did report challenges with, again, repair, construction, consulting to a lesser degree. Again, Q2 saw some easing of restrictions, some returning to business for some of the non-essential services and sectors that are out there in the economy. So that probably is why we still, we saw an improvement here, but still some issues within the industry. And the financial services still experiencing issues as well. So I want to take some time and talk about some of the new things that we looked at in Q2. One of the questions that we asked was about cash on hand. So asking producers and businesses about the availability of cash on hand, and this did include any financial assistance loans that they received. 25% of the respondents indicated that they had about 1 to 3 months of cash on hand to cover operating costs. That was followed by 21% that indicated 4 to 6 months. But we did see some respondents, 9% of Q2 respondents, that indicated they had no cash available, and 3% that indicated they had only about a week's worth of cash on hand, and then 6% with only 1 to 2 weeks. So still quite a few respondents in the second quarter that had less than a month of cash available, cash on hand for operating expenses. So again, looking at some of these longer term consequences that may translate into cash flow problems or other financial challenges for farms going forward. Now, Q2, in Q1, there was the announcement of several programs, financial assistance programs or loan programs by the federal government and some state governments. So we did ask about that in Q2, and that's what I want to spend a couple minutes here talking about now. So we asked respondents which programs that they had applied for during the second quarter, and that's the results of what you're seeing here right now. Again, this is across all segments of the industry, not disaggregated. We saw that 48% of our respondents had applied for the Paycheck Protection Program, and 33% for the Economic Injury Disaster Loans, which was followed by private bank loans or personal lines of credit, and then 18% that had applied for Small Business Administration loans. There was also a percentage, 13% of Q2 respondents that had not requested assistance. We did not have a follow-up question clarifying as to why that was, but of course, every farm does need to evaluate its financial position. Just because loans are available does not mean it's a smart move to take on more debt, additional debt. Farms and businesses have to make those decisions on an individual basis based on their own financial positions. So that's important to consider. So these results are looking at again, who received financial assistance or loans. So those that had applied, who actually received that assistance in Q2. And we can see some high percentages here. Local assistance, although only a few, small number of respondents applied, 100% of applicants did receive local assistance. 90% that had applied for the Paycheck Protection Program had received that assistance. 87% that had applied for unemployment benefits had received that assistance, and about 2/3 that had applied for personal lines of credit or private bank loans, small business administration loans, and economic injury disaster loans had received that assistance. We had a small percentage, 5%, reported that they had been declined for the assistance that they sought. And we had 9% of respondents that reported they had applied but not yet received any assistance. So we plan to repeat these questions going forward, given that these programs are still out there. You'll notice that the CFAP program is not listed here. That's because it wasn't actually available. Neither was the CARES Act program. Those funds were not yet made available during the second quarter. But we will be including these other programs going forward in subsequent quarters 3 and 4 to assess whether industry had applied for those programs and received those funds. Excuse me. Another thing we looked at in quarter 2 was the implementing of new marketing channels. Like I mentioned in the introduction, really what caused a lot of the problems was the disruption to traditional marketing channels for the industry, which then had cascading effects due to the loss of revenue on farms and businesses. So we asked quarter 2 participants whether they had tried to implement a new marketing channel in quarter 2. 11% provided no response to this question, but 34% of our respondents did indicate that they had implemented a new marketing channel, and 10% indicated that they were in the process of doing so. So we did have follow-up questions about this, one of which was in terms of direct-to-consumer marketing channels. This was information that we had gathered anecdotally after the first quarter survey when talking to producers. And so we thought it would be interesting to add that in the second quarter survey to ask specifically what kind of channel, direct-to-consumer channels, farms and businesses were implementing. So this is the results that we got from our respondents. 44% had started a home delivery type service. 59% had started a curbside pickup service. 15% had opened a retail outlet. And I myself thought this was quite interesting to see that 70% of our respondents that indicated they had implemented a new marketing channel had done so with online sales. So I thought that was really interesting. I mean, online sales do have an advantage, of course. You can reach a wide audience through the web. So I thought that was really interesting to see that 70% of the quarter 2 respondents that had implemented a new marketing channel had done so with online sales. So I want to talk a little bit, as you noticed from those tables, really what I discussed there were 3 things. The first was lost sales, the second was challenges with labor, and the fourth were these production challenges. And across the 2 quarters that we have data for so far, these are really kind of the 3 things that stood out from the data. So I want to talk a little bit about those 3 in summary before I wrap up here. So lost sales really were the result of the disruption of those traditional marketing channels due to the closures of restaurants and food service establishments. There were some disruptions at seafood processors due to fears of COVID-19 outbreaks. And that likely also played a role in terms of reduced farm sales to processors. Then again, these cascading effects of market channel disruptions and the resulting loss of revenues is really what drove some of these other effects that we see on the farm in terms of labor and production challenges. And it's also likely that these will present the U.S. aquaculture industry with continued challenges for the duration of 2020. I think it's important to acknowledge that the spring is typically the best marketing period for a lot of aquaculture products. Think of shellfish or finfish. You know, you come out of the winter, you've overwintered a product, and the spring is really when the market starts to take off again. So it's really a prime period for the marketing of many aquaculture goods. And so having the pandemic effects hit during the spring the way they did, I think is going to have longer term consequences for the industry because the revenues that were lost during that peak marketing period. It's also important to note that producers did also recognize issues with marketing of products. So holding products for an extended period of time that they couldn't sell would make that product either less desirable or less valuable, which means more difficult to market at a later date. So those are some of the effects that we are also seeing in the survey and that I think are worth paying attention to as supplies maybe build up on farms, or again, the quality of product is affected because it's not being harvested and sold as it normally would. So labor challenges, again, the farm labor impacts were driven primarily by the loss of revenue from marketing channel disruptions. So really it was, excuse me, lost sales and revenues that drove a lot of these other effects that we saw. In addition to terminations, respondents also reported temporary loss of employees, whether that be due to illness or again, just shelter-in-place orders that were set in motion in various states. Respondents also reported salary cuts, so not necessarily terminations, but salary cuts for owners and management positions on the farm. And there were also concerns raised about the loss of specialized and skilled labor, having folks that had been working on the farm for extended periods, had had special training, or simply just experience built up over time, and describing then an inability to manage the production processing activities effectively because of a reduced labor force. So again, cascading consequences. Respondents did also express concern about the health and well-being of their employees. Several respondents in both surveys noted their efforts to implement revised protocols to allow for social distancing and the purchase of additional COVID-19 related protective equipment, which I think is worth noting. So going back to these production challenges, in both quarters, we did see that respondents reported challenges with inputs and various other services. Here I have that comment on noting that holding inventory of market-ready products will interfere with the ability to start future crops. So if you have a set space that you use, if you're not able to harvest the product, then it becomes an issue or a disruption for your future crops that may need that space or those resources. And so those are some of the kinds of comments that we got in the open-ended sections of the survey from respondents. All of these factors together would suggest that the disruptions caused by the COVID-19 pandemic would likely result in longer-term consequences and may result in supply shortages of aquaculture products beyond 2020, as some of these crops will take multiple years to reach market size. So any disruptions in preparations for future crops today will be felt further down the road. So in conclusion, there are a variety of specific challenges and impacts resulting from the COVID-19 pandemic. They do vary by sector, and I would encourage you to look up the specific sector reports, disaggregated reports that are available if those are of specific interest. I think broadly we can summarize these impacts into the three categories: lost sales, the disruption of traditional marketing channels and losses in revenue, the effects on labor, and then the challenges with inputs, goods, and services provided primarily by other sectors of the US economy. I just wanted to note before I wrap up here that 13% of Q1 respondents indicated that their farm or business would not survive 3 months without external intervention. And that percentage increased to 32% when we increased the term to 6 months without external intervention. In Q2, 7% of respondents indicated that their farm or business would not survive 3 months without external intervention. And that increased to 17% when that term was increased to 6 months without external intervention. Unfortunately, we don't have a way of knowing whether people did exit the industry. We did have some comments that said that farms had ceased their activities for the year and did not plan to try and market product this year, but no way of knowing that those that did exit the industry permanently. I want to note that respondents did indicate that federal and state assistance programs would help their farm or business to survive, and that the results really do suggest that there will be longer-term economic effects for the U.S. aquaculture industry, and that therefore continued assessment of what's happening in the industry will be critical. Last but not least, I do want to say what is happening with this information. This is not an academic exercise in data collection. The results and the reports that we gather from these surveys are being shared with industry and industry associations. They're also being shared with land grant and sea grant extension agents. And they've also been shared with agencies, for example, NOAA. Both Sea Grant and National Marine Fisheries Services have received copies of these reports. The USDA has received this information, informing the CFAP program, as well as NIFA leadership at USDA. FEMA and congressional offices have also been given these reports, and we did provide data and information to the Senate Committee on Commerce, Science, and Transportation, all of which to support additional mechanisms and expediting of programs and support measures for the industry to try and relieve some of these challenges. Additional information on these reports and these disaggregated values, you can find several extension fact sheets and reports on our website. This is the link here. There's also a short editorial that summarizes a lot of what I've discussed, although primarily focused on Q1 in a recent edition of the Journal of the World Aquaculture Society. And we do have a journal manuscript that has been submitted to the Journal of Applied Economic Perspectives and Policy that we're currently working on revisions. I do want to take a moment to acknowledge that the National Oceanographic Administration and Sea Grant have provided some funding for us to be able to continue to do this work. Like I said, this project was started overnight almost, and didn't have any kind of support behind it for the first quarter, but we're grateful that because the information has been useful to them, they've offered to provide some support for us to keep going with Q3 and Q4. And with that, I'd like to thank you all for this opportunity to present the findings, and I'm happy to try and answer any questions that there may be or address any comments.